what I like about Schwab is Schwab, like we said about any premium selling companies that we get into, Schwab is somewhat boring. Now, of course, if something happens with the TD Ameritrade, they'll make some headlines and we'll probably see some price action. But for the most part, Schwab just hangs out by itself around this $80 price tag. Now, $80 is a little bit pricey, but Schwab also has a lot of liquidity in substitute options. So check this out. Back on March 10th, right about here, I was able to buy some Schwab call options. And I bought these call options in a way, I picked the call options that would most mirror the Schwab price action. And so I only paid $34. I paid $34 for these 47 strike price call options that were going to expire not until January of 2023. So I bought these things for $34 and then I waited. And once this thing started to peak and started to come back down, that's when I went ahead and bought a protective option down here. I actually bought it all the way down here at $75 because I was looking at this previous price action. I'm like, I don't want to start kicking in protection until it's necessary. So I bought a $75 protective option. This was a protective put. The expiration on this thing was June. And in order to, by the way, I spent $1.40 a share. So let's write all this down. In order to buy the substitute option, I only spent $34 a share. Then I bought these protective options for $1.40 as soon as the underlying symbol, as soon as Schwab started to march against me. I wanted to protect myself. So, Manny, this was a perfect time for me to buy those options to protect myself. And before that, I was just using the stop loss order. But as soon as it started to like not go in the direction, right? I wanted it to go up. And as soon as it started to go down, I bought that protective option because that protective option, a couple of reasons, but the main reason is because it's going to work no matter what. The stop loss order, there's a little bit of fluff in there, and we talk about that a lot in my program. Now, in order to offset this $1.40 cost, I sold some premium. In fact, I sold the $90 strike price expiring right here yesterday, April 14. So the $90 strike price call, I sold that and I made $2.20 per share. So on the same day when this thing started to pull against me, I bought the $1.40 protective option and I sold the 220 premium option. So if you think about that, I actually walked away after paying $34 a share. I actually walked away with my protection in place with an additional 80 cents per share. But that doesn't stop right there. As soon as I started to bottom out here, and I think it was about 2 days ago, as soon as I bottomed out there and I started to head back up, I sold my options back. So these things that I bought for $1.40, that after I offset their cost with the 220, I actually got them for free and got an additional 80 cents a share to boot. I then was able to sell these things back for $2.50. So check that out. I bought them for $1.40. I sold them back for $2.50, and I got to keep that $2.20. So I paid $34 for these things. Let's actually pull up the calculator here. If I pull up my calculator and you talk about the most I was into this trade was for $34. So $34 was my initial investment. And then if you think about it, I made $2.20. I spent $1.40, and then I made another $2.50. That premium option expired worthless yesterday. And so I'm up to $37.30. That's $3.30 per share profit, which is almost 10%. I've already made 10%. And guess what? I'm still in Schwab. I still own the stock and I'm up 10%. And all I did was a couple of trades on March 10th and then another trade on I'm not March 10th, a couple of trades on March 30th and one trade on April 8th. So in this whole position, it went up 10%. And I'm like, that's awesome. And the reason why I'm even telling you guys about this, not that it wasn't like the most easiest trade to do, because it really was, but also because now's an opportunity to get into this symbol again. This is a fantastic opportunity. We just got confirmation that we had a bottom. This is a great time to be buying some of Schwab, or if Schwab is too expensive, to buy some of the Schwab back month options like I did. Some January 23, 47 or $50 calls would be just what the doctor ordered. They're quite inexpensive compared to the price of Schwab itself. And you'd be able to do the same thing. As Schwab goes up, your main position goes up in value. And if Schwab pulls back, do the same thing I did. Buy a protective option to protect yourself and offset its cost with a premium sale, and then let the premium sale expire worthless, roll out the protective option, rinse and repeat, 10% guaranteed every month. Not guaranteed, but 10% possible every month.